Today, we are honored to have Ching Siu with us to share her valuable insights on the current market condition. Ching Siu joined PhillipCapital Management Sdn Bhd in March 2023 and brings her about 25 years of experience in various industries. Prior to this, she was a senior fund manager, assistant director from East Spring Investments Bhd, where she managed Asia Pacific ex-Japan unit trust funds and private mandates, institutional local mandate. Prior to that, Ching Siu was the head of equity from Libra Invest Bhd, where she managed unit trust funds, private mandates, and investment mandates covering Malaysia, ASEAN, Asia Pacific, and global. She gained her fund management experience in ASEAN and Asia Pacific markets when she was with UOB Asset Management before joining Libra Invest Bhd. Ching Siu has won several Lipper Fund Award Malaysia for the category of mixed asset fund as well as equity trust funds under her management. She is a chartered accountant of MIA and a CPA Australia qualified professional. She holds a Bachelor of Commerce from the UC of Melbourne. Before we dive into the questions, Ching Siu, could you share how has the performance of global markets and currencies been so far in May? And noted in May, investors were clouded by issues such as the tax-linked deal, China recovery, and back home, our weak currency and market.
Yeah. Good afternoon, ladies and gentlemen. Thank you, Kim. Glad to be here again today after the first session last month. Yeah. So in May, it was a very volatile market. Yeah. And if you look at the chart here, right, you can see that Nasdaq continued to be the winner. Yeah. For the month and also year to date. So year to date, it has actually gone up to about by about 23.6%. Yeah, and if you look at the last week, yeah, it has already gone up to about 30+% Nasdaq. Yeah, so Asia Pac ex-Japan market has been quite not so encouraging. Yeah, it has been a laggard in the month of May and also year to date. Yeah, close about 0.3%. Yeah, underperformed the developed market. S&P up 8.9% year to date. But if let's say we deduct the performance from the tech sector, it has actually been quite flattish. So therefore, the market of S&P and Nasdaq is actually driven by tech.
Yeah.
So Europe also saw some moderation after the strong start this year, but still up about 11.2% year to date.
Yeah.
So within Asia Pacific, besides Korea, Taiwan, and Japan, they have been outperforming the market very strongly. Yeah. Other market like ASEAN, and also Hong Kong, China has been quite lackluster. Yeah. Malaysia was down 2% in May. Year to date down by 7.2%. So it has been Malaysia and Hong Kong has been laggard, the underperformer year to date. Yeah? So let's move on and see, what happened to Malaysian market in terms of sector. Yeah. Year to date down 7.2%. So
really, that's a lot.
but it still outperformed Hong Kong. Hong Kong down more than that. Yeah. But Hong Kong has been month to date. Hong Kong market has gained back some.
Recovered.
Yes, about 5%. As I just now.
But Malaysia market has been quite flattish this month. Right?
Yeah, I guess you have to wait until August.
And that's due to.
After the state election, I think the uncertainty probably would be over. That is one of the overhang. But what has driven the market, what has dragged the Malaysian market is really the foreign selling. So then the question will be, how much more the foreign selling can continue, right? If you look at that, last year the inflows is about 4.4 billion. So year to date already out by about 3+ billion, right? So if you think that whatever came in that has to go out, then that would be another 1 billion. So every week there will be, if let's say outflows by average, for the past, the outflows is about 200 million, right? So it will take another month. If you think that the 1 billion which came in last year will have to go out, then it will take another 1 month. So it's just nice after the the state election, right?
Yep.
Then probably May, August, it will
we may
stabilize a
see
bit.
some light at the end of time.
Yes. So in terms of index, in fact, small cap has been doing quite well, but until last month, it actually come off, It was actually down 4.3%, underperformed the benchmark, especially the mid cap, So then maybe we move on to the currency, Well, dollar index has actually up about 2.6% in May. So it reversed the losses since beginning of the year. So year to date, it was up modestly about by 0.8%.
Yep.
So most regional currency actually traded lower against US dollar in May, with exception, Korean won, which has actually up 1% in May. So local front, I know that this is the topic and a lot of people are very concerned. Ringgit Malaysia has been weakened, right? And it gone down by another 3.4% against US dollar. So the downward trend momentum has continued, even last year also already down by almost 6%. So year to date, down another 4.5%. So is that all? I'm not sure. I don't have the crystal ball, to be honest. But later we will tell you why we think that it is actually should be almost done.
What about the ringgit performance against the peers?
Yep, let's move on. I think, last year ringgit has performed pretty well, against our peers. But this year, unfortunately, year to date, we still outperform Korean won, and Japanese yen. The rest we all traded weaker than the peers, So whether it is already there, I'm not too sure. But let's talk about that in more detail later. Why is it we think that it's still undervalued?
Definitely. I think over the past 1 month or so, investors are very concerned about the debt-linked deal as well. And would you like to share more on the debt-linked deal and how that impact the market and sentiment?
In May, it was a dramatic month, so there were a lot of headlines reporting about the debt ceiling, whether it's going to be lifted or not, whether US is going to be defaulting this time or not. Therefore, the market has been very volatile, and it also quite negative until 31st May, right? Finally, US House of Representatives has actually passed the bill to suspend the 31 trillion debt ceiling. So actually, this debt ceiling is not new. It has been raised about 80 times since 1960s. So this is like a politics negotiation to them, right? The two sides has actually negotiating, trying to bargain, But this time, probably market is a bit jittery because the debt has gone up to the ceiling, more than 30 trillion already. So 30 trillion is a lot of money, So this uncertainty already lifted. So we will see that coming to haunt us again, I think in 2025.
And would that actually boost the investor sentiment going forward?
I think so, but there are still many other issues that we have to take into consideration when it comes to investment.
Looks like debt-linked deal shouldn't be a concern, but what about inflation as well as the Fed's action?
Inflation, if you look at the monthly data, it has shown actually gradual decline for the last 15 months, I think. So it has eased to about 4% last month. And it will continue to go down, right? But of course, we will argue that 4% and the target of 2% is still a long way to go, right? But the consumer sentiment has actually improved, based on the expectation of the inflation, But we still think that the inflation wouldn't come down drastically, and the interest rate will probably stay here for longer.
Higher for longer. So what about the Fed's action? we note that Fed actually paused their rate hike in the month of June, but what's the outlook moving forward?
Yeah, so June, Fed actually decided to pause. The rationale, I'm not too sure why, right? But the tone has actually turned hawkish. Hawkish, because it has raised the expectation for economic growth. Although and also revised down the unemployment, to about 4.1%. From 4.5% in March. So that means if economic growth continue to be robust, meaning the inflation wouldn't come down, so fast.
And probably low unemployment.
Yes, and that also means that the interest rate to come down probably is a bit harder. But we still stick to our stance that the whole Fed rate hike cycle has come to the tail end, right? We already see a pause in June. In the longer term, it will only come down, right? So probably perhaps two more. So now the market has actually priced in the Fed fund rate to peak at about 5.25 to 5.5, right? That means the most is another 2. So we will see, continue to watch the data release going forward and see, if there is any change. But for now, we still stick to our stance.
I think ultimately the Fed decision could be very data dependent. I think we will need to reassess our view and closely monitor the market developments. We have covered debt ceiling, inflation, as well as the Fed. And seems like the interest rate has also peaked. Does that mean that investors should actually look at the US market now?
To answer your question, we probably have to, if we would answer, we have on hindsight, right? Investors should invest in US a few months ago, right? It has, if you look at the Nasdaq and S&P, 500 is actually outperformed the peers by far, right? Therefore, to answer your question, we have run some studies to identify, how interest rate decision, by the Fed is associated with the market performance. If you look at the chart here, right? In the past 4 peaking rate, you will see in the red box here, in 2019, 2007, 1984, 1989. So these are the 4 era, the period whereby the interest rate has peaked. And this is somewhat evident now, right? If you look at the US performance right now, it actually followed through, when the rate gone up, and peaking, the market also gone up, right? But now the question is whether after it peak, whether the market will come off or not. That is the question that we have to ask, and we have to try to find out, whether which period, the current market has resembled, right? So if we look at, the market performance, out of the 4, right?
In 2019?
2019 and 2007, right? It's actually the economy actually come down. Therefore, the market performance also come off after it peaked, right? So, but then in the other 2, right, like 1984 and 1989, it's actually gone up. Okay. If you look at the chart here, after it peaked, the Fed fund rate peaked, right? It continued to go when the market actually gone up in tandem with the Fed rate high, and then it continued to stay high and continue to go up. That is based on the situation whereby the inflation has slowed down. So in 1989 and 84, I think that is the 2 era whereby inflation have come off. That means Fed has successfully tackled the inflation issue, right? Then the market continue to go up. So now we have to see which case is it. Are we expecting economic growth to come down? Or
because of slowing
inflation, right? So it's a probability game. So if you would ask me, I think, long US is a long-term buy, right?
Market is very, very dynamic.
Very dynamic, but if you already make money,
Yeah.
maybe you can switch some lah, right?
Yeah.
To take some profit
Yeah.
offhand and invest somewhere which
Yeah.
is still got a lot of
Yeah.
alpha.
So
going forward.
apart from that uncertainties, right, is there any other potential crisis in any other areas within the US market?
Yeah, there's one thing that actually concerned me quite a fair bit is the commercial real estate
Yeah.
sector, right? If you look at the chart here, this is San Francisco lah. I think generally the vacancy rate is around, in US is around 20%, right?
Yeah, it's very high.
Yeah, but San Francisco is like, it hit 29.5%, right?
Even higher.
Even almost 30%,
Yeah,
meaning
yeah.
one out of three is empty.
Empty, yeah.
Yeah, so it's quite concerning. Yeah, so we already have the banking crisis earlier
Yeah.
with a few bank collapse,
Yeah.
right?
Inflation.
Correct. So
Yeah.
now I think this is something that we have to be concerned, and also watch closely, what will be the development going forward.
Yeah.
So if based on the JP Morgan report, right? Most of the small bank has higher exposure to this commercial real estate sector. So if it were to, default, then the small bank will have more impact, right?
Correct.
If you look at that, right?
That will also dampen the banking systems as well.
Correct. We move on to the next slide and you see, right? There are about 11 trillion in commercial loan outstanding, right? And if you look at this chart, about 900 billion is going to maturing in 2023 and 2024, right? And given the high interest rate now and high vacancy rate right now, right? That means if anything happen, it's going to trigger the banking crisis
it's
again.
very detrimental to the banking system.
I'm not saying that it will happen, but this is something that we have to watch closely.
We have to watch closely.
What if, one day the politician or the government or the employer in the US say, hey, every one of you don't work from home, try to fill up the office, so that will help, right?
So we have covered US. What about China? I think a lot of investors here, they are very concerned about China recovery. So I think our question will be, is China recovery still on track?
If you ask me, yes. Maybe I'm not going to show you this valuation chart yet. I'm coming back later. Maybe we move on to the next one. As we mentioned last month, right? We reiterate our optimism towards Asia region. Why? Based on this pie chart, you will know that according to the IMF, right, the most dynamic is Asia, right? In terms of the economic growth, it is still the world major region in 2023. Driven by China and India, all two of them combined, contributing about 67% of global growth. So Asia economic growth is poised to accelerate to about 4.6% this year. From last year 3.8, right? And you will argue that data release about China now is very slow.
There have been a lot of noises.
A lot of noises, but our view about China in the longer term hasn't changed. The fundamentals still solid, but in the near term, probably there will be some noises, not only due to the fundamentals or the economic reopening, but also the US tension, the US-China tension. Although Xi has met Blinken, right? Yesterday, right? 2 days. Okay, but nothing constructive, from the meeting. And today, someone, I don't know whether it's true or not, someone say, Biden say, call Xi as a dictator. Therefore, the market has, come off. Not too sure. There's a lot of, noises in the market. So what we need to do is to find out those that really have strong fundamentals, ignore the noises, invest for the longer term, right? If you look at China, the recovery wise, if you ask me, I would think, if you based on the last month's retail sales, it has actually gone up about 12.7%. So year to date until May, right? it has gone up about 9.3% year on year. So I would think that, this number is okay.
Yeah.
But well, the PMI, everything, other indicators shown something.
Yeah, has been a concern from the investors.
Yes. So I would say give China a little bit more time. Especially, Li Qiang over the weekend, they actually said that there will be a slew of stimulus policy coming out, to boost the consumption and investment momentum. And in fact, they have just cut rate.
PBOC had just cut its benchmark rates yesterday
by 10 basis point, right? So it is actually the second time already of the rate cut this year. So it will continue. So I believe that the policy is supportive and it will come back.
So seems that China valuation has been very, very attractive. Back home, I think investors are also very concerned on the weakness in our ringgit as well as the market. Would you like to share your thoughts on that?
Just now we also touched a little bit, right? The ringgit is really a headache for a lot of investors. And I'm sure that a lot of high net worth also have done some, switching, and probably save some money in foreign currency as well. And then that contribute to the weakness of the ringgit as well, right? But if you look at that, ringgit, the driver of ringgit has to come from the fiscal and structural reform, and it takes time, right? But whether ringgit should trade at this level or not, I think if you look at the next page, here, okay. If you look at the current account, it's actually showing surplus, right?
Still very strong.
Very strong. So the fundamentals why it should not, this kind of ringgit level, it doesn't justify, right? And if you look at the FDI, right, it's about 73 billion in 2022. That was actually a record high, I believe. So, the FDI came in 2022. You do not expect that it will bear fruits in the next year, right? It will probably take 2 to 3 years. And if not mistaken, the Malaysian semiconductor actually contributed about 38.5% of 2022 export. So this FDI majority is actually semicon, right?
Tech and the E&E sectors.
So when the plant is commissioned and start producing, that will actually contribute to export growth, all that. So in fact, I want to share one thing about last month. I have attended the Semicon Southeast Asia. Is a yearly thing, right? So a lot of tech players came. Many of them actually two big hall in Penang, right?
Local and
Southeast Asia and
MNCs.
Even overseas as well. Those Intel, Australia, Teradyne, all these people are around there, Advantest, all that. So we took the opportunity to talk to the players, the tech players, and we asked, what is the development right now? And the tone is actually in tandem, in line with the general market expectation is going to have some weaknesses, right? But they do not see the strong rebound yet, but it definitely is bottom out. So it will actually, we are looking forward 2024, and that is when the recovery will come back. So generally, tech is still a multi-year growth trend, right? IoT, AI,
cybersecurity, data center.
EV, you need 10 times
solar,
of IC, solar. So it is the mega trend that we cannot ignore. So the tech will come back. So last month we talked about tech should be one of the area that we should put our money into. And rightfully in May, month today, we see some live, come back.
Strong recovery.
Strong recovery. When it's strong rebound, you want to change, it's a bit difficult, right? So we have to position ahead for second half and also for the 2024 recovery. So that is the overall, which I think that Malaysia should be benefiting from. And even that, the EMS guy, we talked to them and they actually received a lot of requests for be it from the US MNC or Chinese player. They want to set up, plant in Penang, especially because of the tech ecosystem.
Yeah.
It's quite solid, especially the Batu Kawan side,
Yeah.
right? And it looks, the prospect for me in terms of tech in Penang looks rosy. Yeah. So then you will say, well, then why foreigners still selling, right?
Yeah.
Yeah. So I
The
think
foreign shareholding has been at historical low now.
yeah, so we have been thinking about this, why? And I put myself into the foreigner's shoes, right? If I am the foreigner, I know that state election is coming.
Yeah.
I know this state election is very critical when it comes to
investment decisions.
Yeah, and the signal of the policy
Yeah.
continuity, all that. I probably want to stay aside first, right? But probably I take my money out first, and then I will come back when things have settled down, uncertainty has gone. Yep. So I think that could be one of the reasons. So for me, I would say the foreign shareholding has been already at the historical low. Yeah. So
and hence limited downside.
Yes.
Yeah.
And maybe we bring back the valuation
chart
slide, right? Yeah. Then just now you asked me a question whether US or other market, right?
Yeah.
US, the Nasdaq, the valuation is rather rich, I would
Yeah.
say. But it doesn't mean that it will come off, right?
Yeah.
Sometimes the winner will continue to be the winner,
Yeah.
right? It's all about the confidence. But for investment perspective, we have to manage risk, right? If it's gone up too far and it's already exceeded the valuation fundamental value, I probably will say, I'm not going to sell all.
Yeah.
Maybe I will just trim some and then move some to, I think if in this chart you will see Asia and ASEAN, which is traded way below, right? So I think, in terms of the implied earnings, Malaysia is actually undervalued.
Yeah.
China, Hong Kong is also severely undervalued. Yeah. So I will think that it's wise to trim some, not sell all because it can continue to go. Yeah. When the confidence is there, right? People will rather to hold on to the winner, right? That is the behavioral bias, which we probably may take one session to talk about that. But I think in terms of the investment, it's always good, to invest based on fundamental, right? And now the Asia and ASEAN fundamentals, besides the valuation and fundamentals, all justified, right? And it should deserve a higher PE. Yeah. So that's all I can say for now. Yeah.
So thank you, Ching Siu, for your insightful sharing. And it appears that Malaysia, China, as well as Asia will be the focus this year.
Yeah.
Although there are areas of opportunity in the market, we think it's still essential to stay watchful and monitor for any potential volatility.
Yeah.
PhillipCapital Malaysia is an integrated Asian financial house with a global reach, serving you since 1975. We operate in the financial hubs of 15 countries, including offices in Malaysia. We offer a wide range of financial services, including discretionary private mandates, unit trusts, money market, stockbroking, futures, and contract for difference, available for all kinds of investors, including institutions, corporations, high net worth individuals as well. And our products are managed by a team of investment professionals. Finally, we are your one-stop investment solutions provider platform for more than 400 unit trust funds and more than 76 PRS funds. We have a wide range of private managed accounts that could cater to different investor needs. Okay, we have blue chip is for value investors. We have dividend enhanced for yield seekers. ESG matters have gained significant importance for both corporations and investors in the recent years. And our ESG mandates are suitable for investors who want to optimize the risk-adjusted return by constructing a diverse, sustainable portfolio of ESG companies. Not only that, we have ETF, opportunity, UT, as well as other products to meet your unique investment preference and financial goals, right? For global mandates, we have a Phillip Global Wrap account, okay, PGWA, that allows individuals to invest in international stocks, foreign unit trusts, exchange traded funds, as well as alternative investments. And investors are allowed to gain access to more than 23 global exchange by opening a PGWA account with us, right? Our unit trust arm, Phillip Mutual Berhad, okay, offers a comprehensive list of local and global unit trust funds that may suit your investment preference and financial goals, right? Okay. Phillip Dana Aman is our local Sharia equities fund, right? We also have other conventional equities offerings like dividend, PMEGF, PER, as well as recovery. For defensive investors, our money market funds and Phillip Dana Muni fixed income fund could be an option for you. We also have our Phillip Select Balance. It's a mixed asset fund that invests in both equities and fixed income securities. Last but not least, we have a selection of unit trust offerings with global and Asia exposure, including Asia Pac Income, Focus China, Phillip Global Star, Dana Dividend, as well as Global Disruptive Innovation Fund, right? We are now available to answer any questions that you may have, and please feel free to type your questions in the chat box. Right, feel free to type your questions in the chat box. Okay, we have a questions on Malaysia REIT sector. Is Malaysia REIT still attractive given that we know that, like, we have seen some strong traffic in the shopping malls like Pavilion, Mid Valley, malls like that. So can investor look at Malaysia REITs right now?
I think REITs, right? The driving factor will be the interest rate. So if our expectation of the interest rate to stay high, right, then the margin, the spread is not attractive enough. Therefore, I think it doesn't offer that high of alpha from REITs at the moment. But if you think that it's already picking out, right, and it's coming off, then REITs will probably come back later. Yeah.
Okay. All right. Please feel free to type your questions in the chat box. All right. Yep. We have another questions from the crowd. Okay. Is it a good time to enter into tech funds now?
I have already answered that just now, right? Yeah. So I think tech, when we think that the Fed fund rate is already picking out, right? And the tech, the inventory, the digestion has come to the tail end, then the recovery will come back in probably 2024. And due to the very thin liquidity, probably we have to position in advance, right? Probably 2 quarters ahead. So yes, we have been accumulating tech sector, some tech names, since last month, right? Since April, since April, slowly accumulate on weakness, and we are waiting for the rebound.
All right. So we think tech is still very, very attractive to look at now. But what about other asset classes? We spoke about equities, but what about other asset classes like gold? Is it a good time to look at gold now?
Gold, if Warren Buffett, you ask him, you will say, you know how to value, right, based on the fundamentals.
I think at the point of time this year, gold went up to 2,000 ounce.
And they have actually retraced a bit, right? When the confidence about gold is there, then everybody is chasing gold, right? And it gone up. So we do not have a model, to say how much gold should be trading at this time. So we really don't have the view on gold. So if you ask me about other asset classes like bond, all that, it has come off quite significantly, and you probably can accumulate some, right?
Bond has been trading at very, very attractive level, I would say.
So if we think that the rate is coming off, then the value should grow in tandem, right?
And I think it could be suitable for defensive investors as well. Right. We have another question from the crowd. Okay. We spoke about US market, right? And we spoke about most of the S&P gains this year are actually driven by the tech sector. So what about you know, the other companies within the S&P, and would the US market actually continue its upward momentum going forward?
That's the reason why I would say it will be a long-term buy in US, right? US being number one in the world, yeah, the economic growth, the talents, the IP that they have. I think it will continue to grow, right? It's just that other countries like China will have faster growth rate, which could probably surpass US one day. So two of them is really the two giant in this world, which nobody can ignore, right? And they will stay relevant for long time. So we also mentioned that the S&P 500 especially, if let's say we exclude the tech performance, is actually quite flattish. Therefore, there are still plenty of bright spots in the market as well. Therefore, we cannot rule out, right? The US market will continue to be okay, unless there is hard landing, right? Everybody is speculating on soft landing, right?
If hard landing, then it could be very challenging for the US market, even global markets as well.
Market, yes.
Okay. Please feel free to type your question in the chat box, right?
If no, then probably we can end the session now.
We can end the session now. Okay, in count of 3, 2, 1. Thank you, Cheng Xiu, for your insightful sharing. Thank you so much. I'll see you in the next Phillip Mastermind. Thank you.
Bye-bye.
Bye-bye.